NAB has revised down its capital city house price forecast for 2018 from a 0.7% rise to a 0.8% fall. Of the capital, Sydney is the only one predicted to see a decline in house values, and Hobart is forecast to outperform the rest. While unit prices are set to fall in 3 capital cities, including Sydney, Brisbane and in Perth. And we're being warned, the fallout from the Banking Royal Commission may see overall prices decline even further. Australia's housing market is taking a long expected breather after years of spectacular growth.
So people are saying, is this essentially the start of a major correction? And the answer to that is no.
While not as pronounced, there's still an undersupply in Sydney and Melbourne. Interest rates are at record lows. Owner-occupiers are generally 3 years ahead on their repayments, and the employment market is healthy.
If unemployment gets to about 8%, that causes grief. Now, across Australia, it's like 5.5%.
First home buyers have returned to the market, accounting for nearly 40% of all new property buyers in the first quarter. Foreign buyers lifted from a 6-year low to 10.9%, but investors are playing less of a role.
Owner-occupied credit in the last 12 months is growing at about 8%. If you're looking at investor credit, it's growing 2.8%.
It's that access to credit some analysts say could impact future house price growth, especially if the Banking Royal Commission recommends lenders apply stricter rules for borrowers.
The main change we expect out of the Royal Commission is that banks are going to have to do more due diligence when it comes to complying with responsible lending.
That's likely to mean a more detailed assessment of customer living expenses, which may see borrowing limits fall dramatically.
The average borrower can get about 5 to 6 times their income in a loan. We expect that once tighter lending standards are introduced and higher living expenses are used, that's probably going to fall to about 3 to 4 times the income.
Less money to borrow means less offered for homes.
It really depends on how tight credit gets and how quickly that happens. But if we do see a credit tightening, then 10% is not out of the reasonable bounds.
The Royal Commission will recommence public hearings on April 16.